Hello and a warm welcome to Portfolio Watch. I'm Gugulethu Mfuphi, and today our topic is a Ramaphosa market at a Zuma valuation. Since Ramaphoria, we've certainly seen a resurgent rand, bond and stock market, but when reality sets in, we realize that change comes about as fast as an oil tanker turns. We believe that the South African economy is in the early stages of an economic cycle, which bodes well for cyclical sectors. So to be sure that you have an element of exposure to take advantage of the rising tide, today we'll take a look at some stocks to consider keeping in your portfolio in order to withstand the negative headstorms. Joining me today is Andrew Dittberner, Chief Investment Officer, Private Client Securities at Old Mutual Wealth, and Viv Govender, Portfolio Manager for Swiss Offshore. Gentlemen, great to have you as always, and thanks for making time. I think for many of us, when we look at this particular theme, we certainly understand the dynamics that we've had to withstand over the last 6 months. Let's start with you, Andrew. Given the title, Ramaphosa market at a Zuma valuation, doesn't sound like it's a good time for us to be investing.
No, so I suppose if we look back, thinking 2 years ago to Brexit or Trump winning the US elections, what we saw was very quickly sentiment, moved one way or the other. With Brexit, we saw the pound weaken. With Trump, we had the Trump trade. And that's sentiment that drives it in the very short term. And what happens a few months later is that reverses itself out. And I think we saw that at the end of last year and towards the beginning of this year when, following November, it was, I suppose, a fairly dark period for South Africa. There was a lot of, negative sentiment around, in November, and that's when we saw the market trough. And what happened was we needed something to lift our mood, and Ramaphosa won the ANC conference, as we know, and then all of a sudden, the market suddenly sits up, and particularly companies that face South Africa or facing SA Inc. companies, if you want to say. So you see the banks did really nicely, some of the cyclical industrial companies, which we're going to talk about, I think a few of them. They also set up really nicely, but they probably ran ahead of themselves because this was sentiment in the short term. And, talking to some of the management teams, whilst they said they could feel the sentiment turn around, the mood on the ground, didn't really change. This takes a long time, as you suggested in the introduction. The economy doesn't change overnight. It's going to take many, many years to undo, what's happened over, the previous, call it a decade that we've essentially gone through, where our GDP per capita has been flat, since 2008. So it's going to take a long time. Sentiment turned very quickly, but we actually need to see, fundamental change in the economy.
You are quite right. For the moment, though, it does seem as though the new president is doing the right things with the investment envoy, looking to bolster business confidence, as you alluded to, that sentiment really turning around. But again, what we've often seen for South African listed stocks is that there's a disconnect between the economic performance and, of course, the direction of the markets. What's your take on this, Viv? And if this Ramaphoria perhaps can last?
Well, a couple of things. Firstly, like I've said this a couple of times before, but if you look at the BRICS region, right, there's Brazil, Russia, India, China, South Africa, you can't by any stretch of the imagination think that Zuma was the most corrupt leader during his time in the presidency. I mean, you look at China, you look at Russia, Brazil even. I mean, we're talking seriously corrupt governments, seriously corrupt regimes.
In comparison to his international peers?
In comparison to the BRICS guys, okay? Even our competitor out there, like Turkey, Erdogan, far more intrusive. I mean, literally, they had helicopters shooting missiles over their capital city. You can't imagine that in South Africa, okay?
Yeah.
But their growth rates were better. So that's the disconnect you got to understand. Yes, we've had Ramaphoria come into play, but Ramaphoria comes to the idea that Zuma was holding the country back. I'm not saying he was a positive for the country, but I'm saying that it wasn't the fact that Zuma was in charge that we were basically falling behind the other countries. Because you can't go out and argue that a country that has literally, it was a president that's willing to kill people in like another capital city with poison gas is less corrupt than Zuma.
Fair enough. The examples you're giving are a bit extreme, and many South Africans might think, well, maybe there are other ways in which he might have caused some damage to the economy.
Yeah, but
sure.
Yeah, but still, economically, the intervention that you have and the corruption that you have in places like China and Russia dwarf what we see in South Africa. To a large extent, if you operate without going into the tender sector in South Africa as a private individual, you can operate fairly freely. You can't do that in Russia. You can't do that in China. You know what I mean? There's a very different way of operating in other parts of the world, and corruption is obviously endemic. But what were the reasons that we were growing slowly?
Yeah.
Those reasons are structural. It's education, it's infrastructure, it's the makeup of our labor markets. Those things in no way are being changed by Ramaphosa coming to power. And those things are what we need to change to get to the high growth rates that we need.
Andrew, your take on this, because it's again like vast examples that are being made, but of course we also see the damage that's already incurred in many of our state-owned entities, whether it be SARS, Eskom, and even newly elected Finance Minister Nene being very bold in saying that some of these actually work against us when we try to appeal to our international investors.
Yeah, I tend to agree with Viv. It's a long-term story. What we also fail, whilst we did score some own goals, I don't think there's any denying that over the last decade or so. We've also got to take into account that South Africa remains a commodity-facing country, and we know what's happened to commodity prices, over the, since call it 2000s, global financial crisis, etc. So that also worked against us. And if you look, I suppose, more recently, the negative sentiment seems to be coming back now over the last couple of weeks, given the trade wars, which are again out of our hands, and you get this risk off, and immediately capital flows leave emerging markets, of which South Africa is obviously one. Now we start seeing the rand weakening from 12.50 back to closer to 14 rand last week. I know it's recovered a bit now. And all of a sudden, South Africa's in this bad place again. Nothing's changed, but this is the ebb and flow of the sentiment that happens. And it pushes markets up, and now it pushes markets down. And I think now, with the markets coming under a bit of pressure, there's probably a few more opportunities today, and we speak about this Ramaphosa market at a Zuma valuation. Today, the valuations look more attractive than they did in mid-November 2017, when we were really at our darkest days from a sentiment point of view. So yeah, I think there's opportunities out there.
If we think about where we are though, given the timing of the year, it's mid-July right now, November was just over 6 months ago, this might influence one's investment strategy or outlook. And I recall in the beginning of this particular series, we had discussed that your investment fundamentals need to remain the same so that you don't get swayed by a lot of the noise in the market. How do we need to manage that, especially as investment clients, speaking to individuals like yourselves, where we'll say, Viv, actually take my money offshore, or Andrew, should we keep it local? How do we manage the investment fundamentals and the noise in the market? Because at times the lines can get blurred. Viv?
Yes, most certainly. I mean, look, like I said, when Ramaphoria started occurring, and the rand got stronger, then I did advocate taking money out of the country. And it comes down to the fact that South Africa is a small market, a very small market in international terms, and we are very, as was said just now, we are very skewed in terms of the stocks we can invest in. The things that are huge internationally that we have only one, if not no, avenues to invest in the local market. Pharmaceuticals is one that we're very, very weak on. Techs, other than NASPAs, it's very, very weak in South Africa. It's very hard to get into these things. And you look at these tech companies internationally. I mean, the FANG stocks, maybe not Netflix to a certain extent, but the Apples, the Facebooks, the Amazons, the Googles, these stocks Alibabas, have really, really, dominated the global markets. I mean, I think the stats are the S&P 500, 1/4 of the gains for 2018 are due to Amazon alone, nothing else. So, and that's the S&P 500. So this is where the activity in the world's happening. And in South Africa, we have one avenue to get through to it. And in fact, the avenue is NASPAs, but it's very difficult to do it because firstly, NASPAs is at a massive discount to Tencent because our market is too small to hold it. That 1/3 allocation of Tencent in South Africa is just too much of a size to be held by our market. That's why we can't properly allocate it. And even then, it's too small to hold it and properly evaluate it. It's still 20% of the market. Yeah. So that's the difficulty in South Africa.
Exactly. Andrew?
Yeah, so I suppose to come back to your question, I think the trick is to try not be reactionary. So if you see the rand going to 16 rand to the dollar, like in early 2016, then people get caught up in the noise and say, we've got to take, our money offshore because the rand's going to 20 or 30 or whatever it might be. And I think that's the wrong time to react. And, we saw it earlier this year, when your banks get on, when they shoot up and get to price to book multiples, well in excess of 2 times, it's probably a bit overdone. Likewise, your cyclical industrial companies. Don't react and think you're going to get left behind because, that's just noise. Rather look at the fundamentals and try and not be swayed by what you read, I suppose, in news headlines.
Exactly.
Or, listening, I suppose, to the herd.
Let's have a solid plan in place, but obviously it's time for us to get into a discussion regarding some of those stocks to consider given the current market valuation we're in. Time to get into some of those stocks, and one that does happen to feature on the list, and the both of you had discussed it and alluded to banking stocks. Nedbank is one of those that you're quite keen on here, Viv, in comparison to some of its peers in the market, and of course, given the recent split from the Old Mutual Group, how do you fare regarding this one in its valuation at the moment?
Well, I'm working off the idea that Ramaphoria is real and that we are going to see an upgrade in terms of growth and etc. And then you want to go in the banks, because banks to a certain extent are geared plays on the economy. The economy does better, banks do much better. You know, economy does better. We have a credit rating getting better. So you want to get one of the banks in your pick, because that's going to be one of the advantages here. And when you come to the banks, which ones are you going to choose? I'm thinking Nedbank at the moment is properly placed. I think they've done a nice little turnaround in some of their approaches. You know, from going more to the high end to being more widespread. I like their business, operations as well. Some
challenges in Africa, though.
Yes, there are some challenges in Africa, but Africa, I think, is I'm much more an Afrophoria kind of guy than I'm a Ramaphoria kind of guy. Look, here's a fact that I don't think many people understand. In 20 years' time, right, there'll be 2 workers added in Africa for 1 worker added everywhere else in the world combined. Okay. Now, assuming that talent is distributed evenly, etc. Even if Africa is only half as good as extracting value from talent as everywhere else in the world, you'll have half the world's geniuses, half the world's creativity, half the world's invention, half the world's everything happening in Africa. And that's if Africa is half as good as everywhere else in the world. Can you imagine that in 20 years' time? And therefore, Africa right now may be difficult, maybe whatever, but it is something that you have to be into, because when it does grow, and which will happen within 20 years just on demographics, it's going to be basically like China was 20, 30 years ago.
Very optimistic outlook. Perhaps if we look at another sector, also in financial services, but more insurance-based, RMI is one of those that stands out for you here, Andrew. Broad portfolio, given that it's discovery, outsurance, as well as the likes of MMI. What's driving the force behind this one being in your portfolio?
Yeah, so as you suggest, it's an investment holding company, so it's made up of a number of underlying assets. Some of them that we really, really like, 25% of Discovery and MMI. They also own about a 30% share in a short-term insurer in the UK called Hastings. And then they've got, obviously Outsurance is the crown jewel. I think they own about 90% of Outsurance. And I think if you look, at the short-term insurance market in South Africa, I'd say that they are the standout performer. If you take them on any metric, a claims ratio metric, for instance, they're at 50% versus the market average of about 60. So I think that Outsurance is a fantastic business. They've then got a couple of other low investments. Investment management division, which invests in up-and-coming asset managers that cover the broad spectrum, local equities, multi-assets, global hedge funds, etc. So they cover that whole space. And then they've got, I think in the Alpha division, is investing in fintech, new startup businesses. Yes. One is trading cryptocurrencies, which is obviously, that's a completely different discussion. But, it's that sort of space that they plan. And we don't believe that the value of those underlying assets are reflected in the share price. And it's been under pressure. But with the economy, and I agree with Viv, I think we're in a better place today than we were a year ago from an economic point of view. And as the economy picks up, we'll expect a number of these businesses to take part in that.
Those are just 2 of the few that we certainly look to get into, and perhaps that you can consider including in your portfolio. We'll be back with more stock picks and selections right after this. Welcome back to Portfolio Watch, where our topic for tonight is a Ramaphosa market at a Zuma valuation. We've run through the macroeconomic understanding of this particular theme and, of course, touched on some stocks for you to consider. And my guest still joining me today to give us more details on stocks that you need to perhaps focus on is Andrew Dittberner, Chief Investment Officer for Private Client Securities at Old Mutual Wealth, and Viv Govender, Portfolio Manager at Swiss Offshore. Now, gentlemen, just before the ad break, we touched on RMI together with Nedbank, both in various slightly different sectors, but of course showing significant growth on the market. One other stock that comes up here is Bidvest, and this is just a juggernaut of a company within the South African industry. We do know that they spun off their food division, of course had the headache of that acquisition that had them pop a panado following bad valuations that were discovered, and now really trying to streamline its business and see some opportunity here. When I think Bidvest, I think cleaning company, I think security. Is there nothing that they do, and is there still ripe opportunity for them in the South African market?
Yeah, so I think, with Bidvest, if you want a company that breathes in and out with the economy, this is the one. Bidvest touches every corner of the economy. You mentioned a few of them, services division that has this, the security business, the hygiene business, catering businesses. They then got freight, logistics. You mentioned Adcock, so they also invested in, I think they own about 20% of Comer, you know, office, printing, you know, you name it, these guys have got it. And as the economy picks up, we would expect, you know, Bidvest to pick up as well. Bidvest is obviously a company, you know, it's changed in recent years given the corporate action, as you suggest. So it's sold off Bidcorp, which is an international food business, and now it's a much more locally facing company. It's superb capital allocation when you look over the years and you see, you know, many years of profitability, you know, with ROEs, you know, in excess of 20%. When you compare that to some of the other cyclical industrial companies, it's far superior. And as a result, we believe they deserve to trade at a premium, you know, to some of the other SA industrial businesses. They've also got a defensive nature to them. So you mentioned security and hygiene services and that. You know, I'd see those as, you know, fairly defensive businesses within Bidvest. You know, so they've got the defensive part of their business as well as being fairly cyclical at the same time. So yeah, overall, I think this is a great business if you believe that the South African economy is going to improve from here on out.
Great one to consider. Viv, there's a speech on your list.
Look, if you have the view of the South African economy being, you know, outperforming over the next, say, 5 to 10 years or so, Bidvest is probably a very good way to get into it. It's almost like, you know, because it approaches so many different sectors. If the overall economy improves, you'll get an uptick in Bidvest from something. You know, some of the other players you're talking about, for instance, we'll talk a little later about retailers. There's different approaches to going to the retail sector, and which might be better, which might be worse in the retail sector. But or the banks, you know, there's no one. The bank might be doing better, one bank might be doing worse, etc. But Bidvest is a very, like, you know, almost a no-brainer way, you know, to expose yourself to South Africa.
So full exposure to the economy there. You mentioned retail, and I'm thinking this is clearly an interesting dynamic because consumerism is what drives the South African economy. Woolies got its fingers burnt down under slightly, but still seeing a resilient market in South Africa, even though we know that consumers have been under pressure. I think their target market is actually treating them well here.
Yeah, so Woolworths, you know, once a darling of the market, you know, not so long ago. And we know what's happened. You know, 2014, they went and did this acquisition in Australia, which with hindsight, you know, was a poor decision. They overpaid for that asset, and we've seen them impair it. So I think they paid about 23 odd billion rand for it. Then they paid 7 billion of it earlier this year. But they're making an effort to turn that around. You know, there's been management changes there, etc. So if they can get that right, I think we'll see Woolies pick up again. Looking at the South African business, so it's obviously a retailer, as you point out. I think, you know, our GDP on the expenditure side, about 60% of it comes from consumers. Woolies obviously targets the upper end, you know, when you think of Woolworths food and clothing division. You know, so whilst when you think of retailers, you might think of a food retailer and a clothing retailer, one maybe being slightly more defensive in the food side, and your clothing retailers or your credit retailers like a Truworths, Foschini, etc., slightly more cyclical. They obviously cover both food and, you know, clothing. Their clothing division actually is still a little bit bigger than, or it's a bigger contributor than the food division. But overall, I think if you want to get exposure to the retailing sector in South Africa, I think Woolworths is a good point. Given that consumers are still under pressure, you know, it might be a little bit early to get into your very cyclical retailers, but I think Woolworths offers a good entry point at this juncture.
Viv, your take is on ShopRite, right?
I'm a man of the street, he's more elitist. Look, it does come down to that actually. I do think if the economy improves, we're probably going to see more benefits coming through the lower end of the economy because that's the one that suffered most under the downturn. So you look at the upper end of the economy, towards higher income individuals, there may be a few of them, but they generally tend to stay at the same level, you know what I mean? They didn't, you didn't have too much of a downgrade in terms of lifestyles, etc. If you had a job in South Africa, you're pretty well off. The problem is not enough people had jobs. If we do have an uptick in the economy, we have the unemployment rate coming down. That uptick in jobs, I think, is going to be more crucial. And a company like ShopRite, which is more exposed to the general consumer as opposed to Woolworths, with a high-end consumer, might be more, you know, exposed to that better part of the market. Also, I do think that, again, going back to my idea of Ramaphoria and Ramaphoria, ShopRite is one of those companies that actually went into Africa and made a success of it. And sometimes I wonder with companies like Woolworths, I think it's almost that they're looking at visa by acquisition. So they want to get a visa to go and stay in London or stay in Australia for a bit, as opposed to basically working 6 months of the year in Lagos. And therefore they acquire in places in the world. I mean, seriously, think about it. Why would you not want to go and buy shopping in the UK? It doesn't make sense. It's a very, very tough market. And even the big guys out there, the Sainsbury's, the Tesla, Tesco, sorry, I play Tesla, Tesco's. It's called Asda's. Those kind of guys are suffering in that market, and you want to go and expose yourself more to, not what's called Woolies, but Woolies went to Australia. Going to Australia, a very mature market. You go to places in Africa like Nigeria. You go to, which is a huge growing economy. You know, even with the oil price hurting them recently. You are going to find much more opportunity there, but it's going to be a much more difficult place to spend 6 months of the year trying to get your business up and running.
Yeah.
And I think sometimes, you know, people go for the easy route for themselves and the bad route for the company. But ShopRite, like I said, much better in Africa than almost any other retailer. And I think to a certain extent, Africa has actually got a moat around itself when it comes to the retail sector. Companies like Walmart and so on have come to Africa thinking that they can succeed because they succeed in America. If you basically retail in America, you're playing on easy mode. You do retail in Africa, you're playing on hard mode.
Yeah.
You know, as a game. And ShopRite knows how to play on hard mode, whereas Walmart and the other European retailers don't play on hard mode. They play on an easy, very well structured, very kind of like simple, well functioning infrastructure. ShopRite knows how to work around some of these things, which gives it an advantage in Africa, which is going to be very important going forward.
Exactly.
Yeah, I'd tend to agree with Viv. I think ShopRite is a fantastic business, and I'm not sure why a lot of the retailers, you think of Mr. Price as well, they go outside of South Africa thinking they can do it, and most of them come back with a tail between their legs.
Yeah.
ShopRite's the one that has really been able to, dominate or get it right up in Africa. And you can think of not even the retailers, MTN, Tiger Brands, Telkom many years ago. They all get their fingers burnt in Africa at some point along the line. But the point with ShopRite that I think is important now is that, as Viv points out, it plays to the lower LSM, if you're looking at the consumer, and when the economy recovers, they will definitely be the ones that sit up. If you think of a retail space, ShopRite will most definitely sit up or recover a lot, not recover, but the share price should sit up a lot quicker than the likes of a Woolworths. I think Woolworths is slightly more defensive, but where we are right now, I would rather be on the side of caution with the Woolworths as opposed to a ShopRite. But when this economy turns, you can expect ShopRite to take full advantage of it.
Yeah. Some interesting dynamics, and of course, as you'd mentioned about the share prices, we've certainly seen an unbundling taking place there quite quickly. What about One Logic's logistics business? And one would think with the fuel price increase, VAT increase, actually running a logistics business in South Africa is not easy business.
Yeah, these are very, very tough businesses to operate. They're asset heavy. They've got to have big trucks that move around, oil, petrol, etc. Are all part of the input costs. But if you look at One Logic's, they've done unbelievably well. If you just look over the past year, the share price, if you just look at their share price, for instance, it's gone for, it's up about 50%. Now you think what's happened over the past year, how have these guys done it? And this is a superb management team. One Logic's, if you go all the way back to the beginning, it's Ian Lawrence started Postnet, which you'll remember. That was the beginning of One Logic's and how they slowly built themselves up into a logistics business. And now you see them, they move everything. So in an economy, goods need to move around. And in a growing economy, they're going to need to move around even more. So if South Africa, or not if, when South Africa really turns around, these guys are also very well positioned. If you just drive down, the last time I drove from Joburg to Durban, go down the N3 and count how many VDS trucks. VDS is a division of One Logic's that transports new vehicles from Durban up to Joburg or anywhere around the country. Count how many of those trucks you see. I think I lost count at about 30. They're the leading business in that area. And they move other things as well. Liquids, whatever it is, they can move it. Trucks, new trucks, etc. as well. So it's a great business that is very, very highly geared to the South African economy. However, in times when it's been difficult, they've actually stood the test of time, as they've shown over the last year. So it's a good management business, very entrepreneurial. So it's a great, it's a small cap, I suppose. This is so private client securities, we don't own this in our model portfolios because it is fairly small. But for the private investor, this is definitely one that should be on your radar.
Yeah, look, I agree that logistics are one of the sectors that's going to be ticking up as we get more towards growth coming in the economy. But this is not a South African growth story. This is also a world trend story. I think that, you know, as the world gets more and more online, it's going to be more and more a case of logistics, because who wants to go to the shop when you get things delivered to your house? And that requires more and more, you know, up-to-date delivery, more and more warehousing, and et cetera, et cetera. So that's going to be a theme going forward. And a smaller company might be able to do better than some of the bigger companies out there, because they're more able to adjust, or better able to adjust to like changing trends and changing environments, et cetera. And in addition to that, of course, I mean, if you look at if you want to see who's going to do well when things are good, look who did well or did okay when things were bad.
Yeah.
And this is the case on that way. They've done okay when things are bbad, and that should stand them in good stead when things are good, because then they should be able to really expand on that level of expertise and that level of quality of operations that held them in bad times.
Well, looking forward to a time when perhaps we'll see less trucks on the road and more drones on the air, delivering our goods and services to us. A big thank you to both my guests for joining us today, giving us perspective on stocks to invest in, especially in preparation for the turn in the tide regarding South Africa's economy. Andrew Dittberner, Chief Investment Officer, Private Client Securities at Old Mutual Wealth, and Govender, Portfolio Manager for Swiss Offshore. Do be sure to join us again next week at the same time, and of course continue interacting on social media. The hashtag to use is Portfolio Watch. From myself and the team, it's goodbye for now.